Good day, fellow investors. When it comes to investing, the key is to clearly know your financial goals. Why you're investing, that leads to the how you're investing, and that will lead to your financial goals. A great comment here when I discussed in an interview that my initial idea for investing was to have 1 million, 5% dividend and live off of that to be financially independent. Now my goals have changed, we'll discuss that too. But also what I want to put into perspective here, and I'll show you some tricks and tools on how to know your financial goals so that you reach them with the highest degree of certainty, which is the key of value investing. So let's start discussing my goals. At first, yes, it was about the million, the financial independence, the dividends. Then I started to think about investing well. I didn't have that much money to, let's say, build something around it. So I just wanted, okay, if I have this money, I want to invest it well, gain something on it, and then continue to build on from there. I did really well also that in the 2010s, and now since the last few years with my research platform, my goal is to, yes, compound my money, but also more importantly perhaps compound the value, the money of my clients through my research, and then also showing through my portfolios how to do it. As my, let's say, world and life changed over the last 20 years, the first factor is I think I will never retire. I want to build something that whatever happens, me and my family are okay, which is what I'm working on, but I also want to compound at the best possible rate out there. So my goal has certainly changed. I would love to go fishing every day, but then you can only eat so much fish, so it doesn't make sense. Balance in life, I'll keep working till the last day likely, because I enjoy it, like Warren Buffett, Charlie Munger, you always need to keep your mind busy, so that's a given. I enjoy this, I enjoy the constant news coming around, there are always surprises. I just got used to the volatility, to navigating, to doing research, to learning, and constantly building and compounding something for me and my clients. So now the goals are different. I don't think I'll ever stop, because if I wouldn't enjoy, I wouldn't be doing this already for 2 decades and then professionally for the last 7 years. I'm also doing a good job, as discussed a few weeks ago. I'm beating the market even with my model portfolio on the research platform. Now the difference is even better. As the S&P went down, my portfolio is a little bit up. But that is irrelevant. I just want to continue compound well. Then something that maybe you don't know, also over time, we also do some little charity. The YouTube profits are donated, so we already are building 3 new schools in Nepal now for 2025, also donating locally. I will be adding that soon. So that's also something that, let's say, gives a goal there. But the key for you, I think, is that you have clear financial goals. My financial goal is, okay, compound at the best possible value investing rate I can find. And then all the money that is, let's say, under my influence. And compounding at the best rate possible is something that is related to the right value investing mindset that gives you the right opportunities. Because as value investors, we want to compound long term no matter what, which means low risk, high reward. And this is something very nice that I think everyone should play a little bit with, because it will give you the long-term results, potential results of your investment. So, I don't know, my portfolio, the model portfolio now is around 43,000, 44,000. There is a 250 contribution per month where I invest monthly. If I do that over the next, let's say, 20 years, I'll be 60, and if I do the average that I did over the last few years and even higher earlier, then maybe I'll do a little bit weaker, maybe I'll do a little bit better. So let's calculate where are we in the next 20 years. So the 40,000 can easily go to 600,000, 1 million, 1.6 million, depending on the quality of the performance. The key with value investing is taking little risk or less risk than others perhaps, and then avoiding big declines, because if you just once decline 50% and realize that loss, then all that compounding is gone. So everything is done with the value investing perspective. And if you play around, I don't know, if I go to some other portfolios, if you have $1 million or no contributions at all, or 100,000, and then you try to reach those returns, it is still very significant in life, even over 20 years. And that's why we strive to do this long term with good fundamentals, and that the fundamentals are drivers, not stocks going up all the time. And the key is to have the right long-term strategy. Most people are focused on short-term gains, but on the wrong long-term strategy, and then they invest in the next crazy thing that doesn't work, and then everything is lost. And as Charlie Munger says, a lot of opportunities in life tend to last a short while due to some temporary inefficiency. For each of us, really good investment opportunities aren't going to come along too often and won't last too long. So you've got to be ready to act and have a prepared mind. This is the key. You cannot change your strategy. You need to have the right strategy that works over the next 30 years no matter what. And that is why we do value investing here. For example, this is a house, the current estimated value is 700,000, and I bought this house in 2015 for 280,000. Why? Now if I want to buy it, the estimated mortgage is 3,700. My mortgage after taxes was 1,000. I compared it to the rent. It was crazy cheap. And I said, that's the best investment I can find there. But I did act, and yes, we made some money. We bought other properties when we sold in 2019. I remember discussing in a video how the current buyer is also doing a great deal, despite we sold. But the key here is, when you see those opportunities, you take advantage. Bear in mind, everybody, when I was working, the university, financial people were telling me it's not a good time to buy a house. It was a crazy screaming value investment that others didn't want to see because of the wrong mindset. Going back to Charlie Munger, the wise ones bet heavily when the world offers them that opportunity. They bet big when they have the odds, and the rest of the time they don't. It's just that simple. That is value investing, and that's why I want you to think about your long-term strategy. Where will your finances be in the next 20 years? And what are the risks of you not achieving those goals? That's the key. When you have a clear strategy, then you can start building your compounding machine and portfolios. For more tips and tricks, join my value investing course in the link in the description below that will drive you to the right mindset and help you achieve your financial goals in the long term.